As some of you guys may have noticed, the US dollar just launched off of a cliff. I guess more fell off of a cliff because the dollar just got really weak and we saw some really interesting inflationary numbers this morning. So in this video, what I'm going to do is I'm going to pull up some charts. We're going to look at what happened with the news and we're going to talk about some trade setups and ideas for the US dollar in today's current market. So without further ado, let's get into it. Okay, so I'm going to pull up the chart here. I want to show you guys forexfactory.com really quick just to show you what the actual news was that caused the volatility here to spike for the US dollar pairs. Whether you're watching dollar yen, pound dollar, euro dollar, whatever you're looking at, even gold, there's been a big reaction to this, and let's talk about it. So inflation numbers came out this morning as less than expected. So the point here that I want to make to you guys is that inflation is often a measurement tool used by central banks, in this case the Fed, to possibly talk about tapering and to talk about rate hikes. When there's a high level of inflation, that is a pressure put on the Fed to look to possibly slow that inflation, right? Inflation is not a good thing. It is very painful for consumers and the people of an economy. So when we look at inflation today coming out at 0.3% rather than the forecasted 0.4%, and on the core CPI level, we're seeing 0.1% as opposed to a forecasted 0.3%. What that means is that inflationary numbers are less than expected. Now, inflationary numbers being high usually means that there's a lot of hiring going on. It means that there's, an appetite for consumers out there spending their money and bidding prices up. When we see a slowing of inflation, when there's lack of inflationary situations going on, that usually can be a result of a slower impacted economy. Now, I'll give you a quick example. During recessions, oftentimes we actually see very low levels of inflation because markets are not being, or inflation is not being pushed up due to consumers out there spending money, real estate, jobs being created, right? All that sort of stuff stimulates and causes more inflation. So a lack of inflationary numbers that are pressing on the Fed could hint that the Fed will be in no rush to raise rates and to look to tighten monetary policy. The reason that that is important is because that usually leads to a weaker US dollar. Remember that rate hikes, things like that, are positive for the US dollar. That causes it to go up as there is a demand for investing in the US for the yield that a higher rate could offer. So with that said, there's your fundamentals for those of you guys who like that stuff. Now let's take a look at the technicals. So again, we'll look at the dollar and we can see that there is a big drop here in response to this news. Now I have been bearish on the dollar, so this is kind of, in my case, not bad to see. But for those of you guys who are just watching this and you don't have an opinion or you just want to see, sort of what's going on, check this out. So the dollar was making a nice little recovery after finding support here. And today's news did get us a pretty significant breakout to the downside. We saw this, what was major demand here, falling through on the release of that news. Now, will it follow through? We'll have to see. To me, the answer would be more likely yes than no, but we'll see if I'm right because as we know, markets can be quite crazy. Could be back up by the end of, by the time you see this video, who knows? The volatility is quite high. But what I will say is that these numbers today are definitely more downside biased stuff for the US dollar. And so as I look at this, my first reaction, like I said, is okay, that's some sell-off news. For me, looking for retracements is the name of the game. There are a couple different currency pairs that I'm going to show you guys here as we get into it that I'm interested in potentially going long on against the US dollar. So we'll talk about that. But again, I just wanted to show you this. We'll take a look at the 4-hour chart as well on the DXY. This is the US dollar currency index. We can see that the dollar is suffering today in response to the news. We saw last week the sell-off began, and now as we get into this week, we are seeing some follow-through with those inflationary numbers. Now, there is another number coming, so I want to make you guys aware of this as well. A big number on Friday that could be market impacting for the US dollar is, of course, we'll scroll down here. Actually, let's do this. We'll do this whole week. We'll take a look at this week, and I want to show you this. So on Thursday, core retail sales and retail sales. Now, this is another number that the dollar bulls and bears will be watching to see what comes out for that. But the point here is that this momentum could last until then, right? We have a lot of bearish stuff coming around the dollar right now. We've got Jerome Powell talking about no interest in pushing rate hikes anytime soon. We have heard, We've also heard that the job numbers, the previous job numbers, were not very impressive. In fact, they were very much of a miss. And so all that put together makes me just more biased towards sell side on the dollar. I think the path of least resistance here is to the downside. Now we can back out to the daily chart and you can see, we did poke up into some resistance, found some of that, and then right now we're seeing some follow through. So how can we possibly play this? Well, first thing to start out with, I know some of you guys may not be stock traders, but or stock investors, but I do think that this has the potential to continue to push this market higher. If you think about the dollar, if you think about the stock market, it is priced in US dollars, right? So if the dollar is getting weaker, sometimes you do see a push into stocks for yield, because the inflationary problems or weakness of the dollar tends to push up the stock market, relatively speaking, in a lot of cases. So we are seeing a response here initially to the news. We're seeing this nice little inverted head and shoulders. We are seeing some strength coming into the S&P 500. There could be some breakout plays. Something like this may be worth watching out for. You do have major resistance up there at 45.25 to keep an eye on as well. But I do think that this has potential to continue to push higher. A couple other ones, I think that the euro has potential to move higher. You can see it responding so far so well. So let's actually expand this out. So I want to show you this, guys, a little bit closer. We're taking a look here at the Euro USD. We're looking at the 1 hour chart, and I want to actually change it to the 4 hour really quick. So let's look at the 4 hour chart for the euro. So the euro has been in a nice uptrend. This news here today pushing us back up to the upper limits of this channel that we drew last week. Can we get above it? That's the question of the day. And I do think that this has the potential to help out the euro to try and make a break here. So big, interesting level for me is 1.184. Can we clear it? And if so, I think we may be headed back to retest the highs there at 1.19. So for me, looking at the euro dollar, the first reaction is, of course, bullish in response to this bearish dollar news. So I do think that the pullback has been set. I am just going to say it now. I may be wrong about this, but I think that that is the low for the euro for the next maybe a few weeks. We'll see if I'm right. But again, I think that there may be some good plays on the euro. And also, of course, the pound. You guys know I've been bullish on the pound. I had a really fairly decent trade with the pound last week. So looking at the pound, we did see the pullback to that 50% level, and now we are rocketing back up to the highs. So now, big thing here is, can we break and hold above this big level here at 1.38, what is that, 1.3875, let's say, just roughly speaking. So that was the previous high. We saw that thing held again as we retested it last week. But now with this fresh data, it does look like we are getting above that. Watch for a hold above that. If you're watching the pound, there may be some plays like this, similar to the Euro USD, where you see that break, hold above that level to show that there is enough buyers to keep it there. And then maybe there's some upside from there. So I do like the pound. I do like the euro against the dollar. The dollar yen coming down hard today in response to this, but still very choppy. Not my favorite pair. We can take a look at dollar Swiss. Similar, very choppy, not my favorite one. What about the Aussie? The Aussie may be due to recover more here from this. We have seen that the Aussie has tagged just recently its 38.2% retracement. Let me draw in this, and you can see, bam, push up, retraced, found that 38.2%, and now is just hovering there. But this may be the catalyst that the Aussie bulls need to sort of see that breakout and continuation of the trend. So we will see if there's anything like that going into today. So with that said, guys, that's going to wrap up the video. I just wanted to get a little bit of coverage in on this. I know it's a quick video, but I sort of run after these events once they happen, just to give people the answer that they're looking for in terms of their questions. So let me know, what are you trading down below in the comment section? And if you made it to the end of the video, let me know. Thank you guys for watching. If you like these sort of videos, make sure to hit that like button down below and subscribe, and YouTube will start sharing more free trading content with you. Guys, thanks so much for watching. See you back next time.